Hi, everybody. I am Ross Healy, the chairman of Strategic Analysis Corporation, and I want to welcome you to our new Friday Focus SVA in Action series, which is replacing our previous long-running FANG Friday webcast. Now, I do want to remind everybody what SVA is. Okay, SVA, or Structural Valuation Analysis, is a balance sheet-based approach to the market, and it merges fundamental analysis with what is known as technical analysis. And those lines that you see on the chart are essentially price to book breakpoints. But these technical breakpoints apply equally to stocks and stock indices as well. Anyway, for those of you who'd like to learn more, please go to strategicanalysis.ca. Now today, I'm going to take a look at the railroad stocks, and I'll be looking at both the American and the Canadian rails. You are going to see something that I have always found fascinating, and that is that industry stocks tend to trade very much alike no matter what country you're in the world, which means that you can glean very helpful and trading information to get you into a given industry, but also to get you out. So let's see what I mean, and we're going to start off by looking at CSX. You can see that CSX for the last couple of years has been trading in a nice narrow channel between its what we call its MSG price, that's 5.5 times book, and its LSG price, which is 4.5 times book. And it was trading there quite nicely, but has recently broken down. And the question is that something temporary, or is this really meaningful? Well, to find out, let's go and take a look at some other stocks in the industry as well, and we'll shift to Norfolk Southern. And again, just like CSX, it was trading for the last couple of years between two breakpoints with actually a fair amount of precision. Very recently, it has broken down as well. If I turn to Union Pacific, same story. Again, trading between two breakpoints, and very recently has broken down. By the way, I hope you noticed that dotted line there that appears on every chart. That is the fair market value. And you will see that the rails have tended to stick fairly closely to those fair lines. Well, let's take a look at CNR, and what do we see here? Same story, only CNR actually broke down earlier through its LSG price. So in a sense, therefore, CN was leading the rail industry down. It almost got to its SG price, that's its super growth price, which is 3.5 times book value. We ought to actually get a rebound there. And finally, we take a look at CP Kansas City. And again, a long channel. Not much growth, but a long channel there, and also sticking fairly closely to its fair market value. And it has broken down recently as well. So what do we glean from this? Well, the rails pretty much trade very much alike, and all of the rails have been breaking down, some earlier, some later. But it is telling us, perhaps, that the rails are forecasting a change in the economic outlook. Anyway, that's all for now. Have a great week, and I'll see you next Friday.